The following segment sponsored by Mears and Associates.
Well, in our financial corner this morning, we're taking a look at long-term care versus life insurance. Here to discuss both and tell us some of the benefits, Mark Mears, of course, from Mears and Associates. Always nice to have you back on the show.
Always love coming here to my old hometown.
Isn't that fun? And
Yes.
we got the blue memo today.
The blue memo.
The blue
That's
memo
exactly right.
for the
We
Monday.
match.
Yes. But certainly talking about long-term care, and I know that's one of those things we talk about how expensive that can be. I think a lot of seniors worry.
It's very expensive, and today we're talking about general concepts, but long-term care policies, they can run from $7,000 to $10,000 a year in cost. So here's our alternative. There's a lot of financial options people have that they can invest their money in, get a good solid 5% interest that will include a long-term care benefit on that financial option. So when I've been in at least 5,000 meetings, when I talk to people that have enough money to retire on and they're adequate with their assets, what do you think the number one goal they have in mind for that money?
We were talking about giving it to their family.
Giving it to their family.
Lots
They don't
of
want to
people.
spend it. They don't want to buy yachts, go on exotic vacations. They want to make sure that money passes to their children and grandchildren. And by the way, why do grandchildren and grandparents get along so well? Because they have the same common enemy. But anyhow, two things that'll keep you from passing that money to your children and your grandchildren. Number one, federal income taxes. You know, the Wall Street Journal said that all IRAs, one day, yours, mine, when they're passed to the family member, they'll be plucked like a chicken for income taxes. The other thing is nursing home or in-home health care. It can eat up $250,000 in a person's lifetime. So without having to purchase a long-term care policy, think about this. CDs, I'm not against CDs, but if you have money in CDs, that doesn't provide any options to pay long-term care costs. Stocks don't prepare any options to pay long-term care costs. But there are investment choices that have riders that pay the money that you earn is a good solid 5%. But if you need long-term care or in-home care, those investment options, riders will pay the long-term care costs for you without having to buy a long-term care policy.
Wow, because those costs add up quickly on a monthly basis. I can't imagine once you look at a couple of years or multiple years, a lot of people depletes their entire savings and then they even have to have some more care.
Amy, it wasn't that long ago that we were looking at long-term care costs in this area on an average of about $30,000 a year.
Yeah.
Depending on what facility you're talking to, some are up to $70,000 and $80,000 a year. And do the math. If you've been in a facility 5 or 6 years, it goes quickly. And there's a double-edged sword there, because if you do have to take money out of an IRA to pay those costs, you're getting double whammy. You got to pay the tax on the money you're taking out, and then you lose it to the healthcare facility. What we're saying is consider looking at some of our options while your money is invested and earning 5%. If you do need care, the funding is there.
All right, certainly a lot of information there. We're going to give everybody the website. If you would like to learn more, or if you would like to have a conversation, you can call that number right there on your screen. You can also check out the website at marksmears.com.
The preceding segment sponsored by Mears and Associates.